Hey there, my name is James Lee. Welcome to my channel 5149. If you are just joining us from the Breaking Points deep dive into FedNow, it's good to see you again. If you haven't seen it, no worries. Let me fill you in real quick. The Federal Reserve has just launched a new digital payment system called FedNow, which could have profound implications for our personal privacy and freedom by potentially opening up our every financial transaction to the monitoring and scrutiny of the federal government. But could this just be an opening act? Could FedNow be setting the stage for something even bigger?
A CBDC.
Central bank digital currency.
The long-awaited paper on the central bank digital currency being issued at this time.
The creation of a digital dollar.
This is a stepping stone to a CBDC.
First off, let's define what a CBDC or central bank digital currency is. The most straightforward definition is that it is a type of digital or virtual currency that is issued and regulated by a country's central bank. And according to legacy media, it's supposed to revolutionize banking for everyone.
Currently, regular bank deposits, cash, and cryptocurrencies issued by the private sector, such as Diem and Bitcoin, all have a few features that make them useful. But the hope is that publicly available CBDCs would have all these desirable characteristics.
In theory, that sounds all well and good, but according to Professor Richard Werner, an economist known for his research on monetary policy, banking systems, and economic development, the idea that CBDCs represents a revolutionary leap in banking technology is a little bit of a misnomer.
The fundamental concept is not new. We've had bank digital currency for ages, and actually there's nothing wrong with bank digital currency. It's a very decentralized structure at the heart of the economy. Now there clearly is a drive to introduce something that is far more centralized, central bank digital currencies.
So it's less about innovation, more about centralization, but to what end exactly?
They're not really a currency, also they're a control tool more than anything.
That's right. According to Werner, CBDCs can enable authorities to closely monitor and track individuals' financial transactions in real time, providing unprecedented levels of surveillance. The programmability of CBDCs can then be used to incentivize or disincentivize certain behaviors or activities up to the point of censoring individuals or groups involved in disseminating ideas or partaking in activities perceived as threats to the existing power structure.
Sorry, your money is not going to work for certain transactions, and the central planners will decide what's good for you, what you're allowed to buy. This book is okay, but Princes of the Yen, we don't want you to read and find out how central banks have been manipulating the cycles and the economy to increase their power. And so it doesn't work, you can't buy it.
Ooh, and they say this is somehow a good thing.
When there's only CBDCs left, they say monetary policy works better. Why? What do you mean? What's going to work better? Well, sometimes it will be necessary to move interest rates very low. In fact, have negative interest rates. Because what is negative rates? It just means they will take away parts of your money every month, will be booked out of your account automatically. Sorry, it's a negative interest rate. It's like a tax. It's like taking your money. And of course, if you have cash as an alternative, well, thank you. I'm going to move all the money into cash, is what people sensibly will do. That's why they don't want these alternatives, so they can just take your money.
Dystopian? I think so. Let me know what you think. And unfortunately, the process to centralize the banking ecosystem and discourage the use of cash has already been underway for quite some time. Historically, the US has actually been an outlier amongst most industrialized nations in terms of the sheer number of banking institutions that exist, which can be traced back in part to the philosophy of one of the country's founding fathers and third president, Thomas Jefferson, who was strongly in favor of dispersing economic power across the country with locally rooted banks. But unfortunately, over the past 35 years or so, over 10,000 banks have disappeared in the United States, with 3 of the most high-profile collapses occurring this year, an alarming trend to put it mildly.
Silicon Valley Bank collapsed last week. It set off a domino effect across the banking industry. Signature Bank failed too. First Republic had to be bailed out by other banks. Overseas, Credit Suisse needed a big loan from the Swiss version of the Fed.
Across the Atlantic and Europe, thousands of banks have also disappeared in the last decade and a half, and some claim it's by design.
It's an official policy. They say there's too many banks. We want fewer banks. Why? Well, they're a central bank where the central planners work, and central planners want to centralize. Now, where does this lead to? if policies continue, the number of banks will continue to decline until what is left is the central bank, only one bank.
I don't know if in the US we'll ever get down to just one bank, but there's definitely evidence that centralized authorities in this country would prefer fewer banks. Case in point, in the aftermath of the collapse of First Republic Bank in May 2023, JP Morgan Chase, the country's largest bank, cut a quote-unquote shady sweetheart deal in which federal regulators waived a 1994 law limiting any one bank to under 10% of all US deposits by granting them the right to acquire $212.6 billion of First Republic's loans and $92.4 billion in deposits. In terms of the global trend to eliminate cash, earlier this year in Europe, EU lawmakers imposed a €1,000 cap on crypto and cash transactions.
Problem is they don't want to be controlled. They don't want to.
Yeah, but you know what? Now we have in Europe this threshold above €1,000 you cannot pay cash. If you do, you are on the grey market. So you take your risk. You get caught, you are fined, or you go in jail.
Holy hell, can you imagine going to jail just because you paid for something in cash? Another example, in Nigeria late last year, the Nigerian government manufactured a cash shortage for the country's 200 million citizens that led to protests, riots, and unrest throughout the country as the government introduced the e-Naira, Nigeria's new central bank digital currency.
Actually slept here thinking I would withdraw early in the morning, and I got a number but I couldn't withdraw because before it was my turn, the machine shut down.
Very disturbing, but the good news is that dissent in this country is actually alive and well.
It's hard to overstate how dangerous a path this is.
In the US, politically, there is bipartisan rebuke of a mass implementation of a CBDC. Ron DeSantis, governor of Florida and Republican presidential primary candidate, has banned CBDCs in the state of Florida.
I'm here to call on the legislature to pass legislation to expressly forbid the use of CBDC as money within Florida's Uniform Commercial Code.
On the Democratic side, presidential primary challenger Robert F. Kennedy Jr. has called CBDCs a quote-unquote slippery slope to financial slavery and political tyranny. Even Federal Reserve Governor Michelle Bowman, who perhaps not coincidentally is the only Fed member with community banking experience, expressed skepticism over the possibility of a US digital dollar by saying that, quote, the risk that a central bank digital currency would provide not only a window into, but potentially an impediment to the freedom Americans enjoy in choosing how money and resources are used and invested.
Enabling this type of limit through a CBDC would stand in stark contrast to the flexibility and freedom embedded in physical currency or bank deposits, and could serve to control or even harm consumers and businesses.
So I think it's a good sign that there is momentum to build what the mainstream might find to be an unlikely or even intolerable alliance for the sake of protecting the freedom and sovereignty of regular people. And as we move forward, I think it's crucial that we continue this dialogue, continue to stay vigilant, informed, and continue to push for transparency and accountability in the development of these new financial systems like FedNow or CBDCs. That is all from me. Now I want to hear your opinion. Please share your thoughts in the comment section below. If you found this video helpful and you want to spread this information to others so we can stay free, please take a second to like this video, share it with your friends and family, subscribe to my channel, and turn on that notification bell. As always, I'd like to thank you for your time, and I'll see you in the next one.